Guys, I wanted to take some time and make this video because of what we're starting to see in the economic markets and the bank markets and all that. And one of the things that you're going to hear, especially during this time with the bank failures and stuff like that, you're going to be hearing this big push to go out and buy gold and silver and things like that. And I wanted to take some time to talk with you all about that and to show you why that is not necessarily the best idea, the best thing to do. Depending on what you're wanting to do, what your plans are, it's totally up to you. Don't take financial advice from me, but I'm just going to share my opinion based upon data. What I have in front of us here is a trend showing the historic prices of gold. Okay, this is something that any of you guys can look up. This one comes from Macro Trends, and what it does is it shows us over a period of time, going all the way back to the 1960s, what the value of gold was then, all the way up till today. And in this chart, what it basically shows us is that the highs and the lows and things like that for gold, there's such volatility in it, and really, unless you have like several decades to keep your investment, then you're not necessarily going to make the money that you think. You can see here the time frame here of these peaks and these valleys. This is August of 1980, and you can see that the price of gold then was $2,200 and $2,265. Okay, that's 1980. Let's fast forward a little bit. Okay, here we are to some of the more recent months. This, of course, is August of 2022. And you can see that the gold prices are actually lower than what they were in 1980. And I'm going to scroll on down here and show you this chart to give you some better views of it. You can see here in 2023, here is our average closing price. Here is the year open, the year high so far, the year low, and so on. And this goes all the way back until the 1960s. As we can see, 1969, gold was $41.10 an ounce. Now you can see that over time, yes, there has been a significant change from what we had seen earlier. But again, if we go back to some of what we were looking at before, you look here, 1980, the highest, here on this chart here, the average was 614. Now there again, this is a yearly average. What we were looking at on that chart was basically, monthly costs. Okay, up here where it was peaked so high in 1980, that's April of 1980 right there, $1,900 and so on. For the year, you can see here, this is what those prices were. This is the yearly average, the average closing price, not the peak. There's so much up and down in it. But it goes to show you, though, what tends to happen, especially during these periods to where there is craziness within the financial markets. There's a lot of folks out there that know that there's a lot of people that are going to rush out and buy gold. Okay, if gold is going to be the tangible asset that they try to make you believe that it is, do you really think that those big companies would sell it off? The answer to that's no. Okay, they know that during times of economic upheaval, that people panic, and they're going to take advantage of those panics. That's why you see all these dips, these ups and downs. August of 92, $731. December of 92, $709, and so on. Okay, we go all the way up. We get up to 2012, December of 2012. It was up to over $2,000 an ounce. Okay, which is still higher than what we see, today. There again, it goes back. You can change and go however many years you want, 5, 10, 20, 30, 40 years, just whatever, and you can break it down. don't be played the fool. If you decide to invest in gold, that's up to you. But with the way the things are going, with the financial systems, you cannot eat gold. Okay, you cannot drink gold. The only thing that you can do with gold is sell it and hope that someone will buy it. But the reality is, if you get into a major situation to where there is true hard economic times, and there's a lot of people out there, if you go out and you actually study what happens in places that have seen these economic catastrophes, gold is not the commodity that everybody wants. It's a bottle of water. It is food. It is clean clothes, things like that. Those are what becomes valuable. We can see that in a lot of recent history, with the things that have happened in Argentina, South America, even over in Greece and things like that. Start digging into the details of what happened during those economic collapses, and you'll see that the gold, there again, people do use it as a way to make money, but they're people that, they're people that get others to buy what they push. They play on that fear, as I mentioned earlier, to get you to give them money. Okay? But there again, don't take financial advice from me, guys. You can do what you want. But that's just a completely, it's up to you. It's up to you guys. I'm just trying to put some information out there based on the data. This is 40 years worth of data or so. There again, 1960 until 2023. That's quite a few years. That's like 60 years, doing the math in my head or whatever. And, so don't be fooled by what we're seeing out there. Don't be fooled by these people that are just trying to steal the money from you. As far as an investment, there's people that will invest in gold, but I want to show you the difference in the average price for just a 10-year track record. Okay, if we go back to 2013, the average price, $1,400. Okay, just over $1,400. Today, in 2023, the average price, $1,800, almost $1,900. For 10 years, you're looking at about, less than $500 difference as far as long-term investment. So that, to me, I don't really think that is a very good investment. But there again, that's just my personal preference, guys. But guys, this is just some information that I wanted to share with you. And let's just, look at this. Let's look at this real quick. Gold price versus the stock market. Okay, guys, here is that chart. Gold prices versus the stock market for the last 100 years. Okay. We can see the average value of the stock market compared to gold. It tracked very closely for a long time. But the further we got, you can see that there is a split. Okay, big difference. 81, 88, and so on. You can see that the stock market just exploded in value compared to what the value of gold did. Of course, we go all the way back to the beginning of this chart. This is back in 1915, 1916. Let's look at the Great Depression. Okay, 1921, 24, 5, 6, 7, all the way up to the 1930s. We can see the value of the stock market to the value of gold. You would think that even then, in the hardest economic time that our country has known, that gold prices would have skyrocketed here. But we can see they didn't, okay? Because the gold was not what was valuable, But, again, don't take investing advice from me. I'm just some guy on the internet with a YouTube channel. I'm just trying to share some information out there, put some information out for you. You would be better served, in my opinion, that if you would take that money that you were going to invest in gold and you invested it into training, you invested it into being more self-sufficient. But that's just my opinion. Guys, let me know your thoughts down in the comments below. Also, check out all the links down in the description. Thanks for watching. Check out the rest of the videos on the channel, and we'll see you next time.